this video, we're looking at office supplies and how to record the use of them over time. I think most people will find this similar to the concept of prepaid insurance. And one thing that we want to talk about first is what is the difference between, let's say, office supplies and office equipment. Office supplies are going to be those small items such as paper, staples, pencils, pens, things like that that we expect to use in less than a year. Office equipment, which we'll see later, are items that are going to last multiple years. Things like computers and copiers, things that we're going to learn depreciate over time, write off over time. So what we're looking at in this problem is office supplies. And in this example, we purchased $1,000 of office supplies on July 31st, 2008. At the end of the year, we count the supplies and find only $600 left. So the first thing that we want to do is record the original transaction. So the regular journal entry that we would do is just recording the office supplies to an asset account called office supplies, $1,000. Let's assume we paid cash $1,000. Now what we need to do is recognize how much we've used up of the office supplies, and that we will convert into an expense item. So this is a little tricky because what we do is we have to back into how much we used based on how much we have on hand at the end, and this is where a T account is really helpful. So we can see in this T account for office supplies that we have the original $1,000 that we purchased, and then our ending balance is $600. That's where we want to end up in this account. So now we back into what do we need to do to adjust and recognize the amount that we've used to get to the $600 on hand. So here's the formula: $1,000 minus ending supplies equals $400 supplies used, which will be the expense account. So our adjusting journal entry looks like this: $400 to office supplies expense, and we will reduce our office supplies asset account by $400, and our T accounts, both of them will end up looking like this. So it's very similar to prepaid insurance, but we have a little twist of backing into the amount that we've used based on a count that we make of what's left at the end.